Hi, this is Russ McClellan, designated broker at Keller Williams Realty. If you're thinking of selling your home, why hire us? We have a few simple goals. First, our job is to make you more money in less time by exposing your property to more people than anyone in the business. Second, we will simplify the process. Your Keller Williams expert advisor will identify simple solutions in a real estate world that can sometimes get a tad complex. Third, we will save you time. We will handle the entire process necessary to achieve your real estate goal so you don't have to. We work for you. Finally, we keep you out of trouble. Let's face it, we live in a litigious society and real estate is a big ticket item. Truly knowing how to do the right things in the right order is very important. Hey, call us today and let's talk about how we can achieve these goals for you. 509-888-0038 or simply stop by our office located directly across the street from McDonald's at 1111 North Mission Street. Hi, this is Russ McClellan, operating partner and designated broker of Keller Williams Realty, North Central Washington. Hey, thanks for tuning into our show each and every Saturday morning. I wanted to share the fact that we've been in business now about a year and a half. We have over 50 real estate agents, and there's a reason for that. Mainly, it's relationship and culture. You know, sometimes people definitely look at the money and the commissions and the splits. But at the end of the day, it's about relationships, trust, that familial connection that you have at Keller Williams. That's what we strive to do, and that's how we look at our clients. We now have offices in Brewster, Chelan, and Wenatchee. We have agents in Wenatchee and East Wenatchee and Cashmere and Leavenworth, Chelan, Brewster. Really having a good time. So if you're interested in learning about why is Keller Williams Realty growing as fast as we've grown and have as many agents that are focused on their clients as we do, give us a call at 509-888-0038 or just stop by and see us at 1111 North Mission Street right here in Wenatchee.
You're listening to Home Sweet Home. And now here's Russ McClellan.
Hey, welcome back to Home Sweet Home with Russ McClellan and friends. Lisa Boyle, 679-4888. She's going to go off and sell a couple more homes probably tonight. Who knows? That girl's on fire. Yeah. I got Taylor Stimmel, my CEO and team leader at Keller Williams. Thanks for tuning in. We're having a good time. As always, we got Michael Maher and Prime Lending. How you doing, Michael?
Doing well. Yeah, she's killing it.
Yeah, she really is. And so are you guys. I mean, what I often say is that, everybody in any business doesn't know what they don't know, right? But quite often the abundant thinker will find out. And the scarcity mindset, which we talked about a little bit in real estate brokers, but it also is true in lenders. And one of the things that I've been seeing a lot of, Michael, is that when this topic of rehabilitation loan or rehab loan comes up, I've had lenders tell our clients that is the worst idea ever. And I'm thinking to myself, well, I know we've done a lot of them with Michael, and he's very familiar with it, and it's turned out amazing. So it's funny to me that some lenders will just talk down to something simply because they don't understand it is what I think is happening. But rather than talk about them, let's talk about that loan, and let's simplify it for people if you don't mind.
No, absolutely. So I think it's so important to realize how simple they actually are. Basically, if you own the home, you're able to do a refinance and take any work that you're wanting to do to the home, whether that be a roof or flooring or really anything that's permanently affixed to the home. We even have a pool loan that we do. And you can stack that into the loan amount. And if you figure about every $10,000 you add to the loan amount only changes your payment about $50 or $60 a month, the dollar can really go a long way when you're talking about a renovation or, like we've talked before, an enhancement loan that has a little bit better, more of a positive spin to it. Mm-hmm. And it's really important to note that that's not that hard. You can do it on a purchase as well, so it doesn't have to be something you already own. But if you're looking at buying a house that maybe the seller doesn't want to do some of the deferred maintenance they've had, maybe it needs a new roof or a bathroom's unfinished or the kitchen was torn apart, something they started but didn't have the money to finish, or maybe some life changes happened and that's why they're selling the home and it just the project went undone. That's something we can wrap all up into the loan. And what's nice about these is that in some cases you can actually go above and beyond the appraised value depending. And the appraisal or the appraiser uses the as completed value after the work's already been finished, so you're gaining any equity that you would have had before the work's even been completed. So it makes it nice to be able to turn around and take advantage of that and not have to come in with that money out of pocket.
Yeah, so let me get this straight. So if somebody says, all right, Russ, I want a home with a pool, and we look around and there really isn't any homes with pools, at least in the area that this particular buyer wants to buy. What we can tell them is, hey, why don't we go talk to Michael at Prime Lending? Why don't we find the home in the location that you like and the home that you love, and then let's add the pool as part of the deal, and we'll write it up contingent upon getting this particular enhancement loan. And then what you're saying is when you make that application, once you get mutual acceptance, you're going to order the appraisal, and then you're going to combine the pool contractor information, the estimates, I assume, plug that in, show the appraiser what you're going to build, and they're going to appraise the complete package.
Yep, you got it.
And then it doesn't slow down closing. I think this is one of the mistakes that some people, or assumptions that people make, that is incorrect. If you're a seller selling to somebody that wants to do this, you go ahead and close the loan just like you would close any other loan, right? Because the work doesn't have to be done before you close on the house.
Correct. Yep. It happens as soon as it closes and the seller gets their money, and then the contractor works with our renovation department to receive any draws or any money that they have. And then a nice important fact to note on these loans is depending on the complexity of the project and how much work someone's doing to the property, we automatically impose a contingency anywhere from 10 to 20%. Usually it's about 10%. If it's a very complex project like an addition and such, that the contingency will go up quite a bit. And all that does is protect the buyer in case there's overages, because you don't really know what you're getting into in some of these cases unless you start actually punching down walls and opening things up. Sometimes things happen. So there's a built-in safety net to help counteract any surprises that may come about. And if you don't use that safety net, you turn around and we apply it as a principal reduction to the loan, and in turn lowers the payment. So it's not that the money is just going to sit there and you're paying interest on it if you don't use it. It actually gets reduced on the principal, and you can turn around and lower your payment, and your home's all done and finished. So it's a very easy process, and it doesn't delay anything. I'd say the hardest part of it is just finding a contractor that you know and trust, which if you're working with a good real estate agent, like, I'm sure many people at Keller Williams, North Central Washington, can refer you out to some good contractors, and I have some contractors as well. Just so long as you're working with someone, that's worth their salt and has a good reputation, you can turn around and everything should go pretty well. So that's typically the most challenging part, is just getting the bid. Once that's done, it's all basically just like closing any other normal loan.
So, Michael, I got a question for you on these. So one of the things I've had from clients is asking, is it going to be a lot more expensive as far as the monthly payment or the rates that are out there for these type of loans? So what does that look like for somebody who wants to do it as far as costs will go, and for one, maybe how much it may add to a payment or even an interest rate? Yeah,
no, good question, Taylor. So typically the rates are going to be about the same. If people aren't familiar with, every rate typically has a cost, and those are known as discount points. So we won't get too far into those, but basically you're paying to discount the rate. You're paying to lower that rate. So in a sense, the only difference on the renovation loans is sometimes it can be, depending on the product, whether it's a conventional loan or a VA, which we offer zero down veteran renovation loans that people can do. You're still coming out with no money out of pocket. Or a conventional, it can be as much as about a quarter of a point cost difference in the rate. Even though the rate stays the same, it might charge a little bit more to get that rate, or in some cases it's exactly the same. And like I mentioned earlier, at about every $10,000 you add to the loan amount only changes your payment about $50-$60 a month. So if you were to do a $30,000 renovation project, you're talking $150 to $180 a month difference in your payment, and the rate could essentially be the same. So the value that you get from that far outweighs any cost. And I've had some people, do some deferred maintenance, things like that, and do some other projects, gut the entire house, and they instantly gained another 80 to 100. This isn't going to be in every case, of course, but in this particular case, about $80,000 to $100,000 over the course of 6 months after doing this, because of how much work they did and the opportunity they had of buying a home that did need a little bit of love.
Yeah, I think it's a misconception that, in the olden days, it was just an FHA loan.
Yeah.
Right? I mean, I don't even remember what that number is. I haven't used that program in a long time. Do you remember what that FHA loan that was around forever?
Yeah, the 203K.
203K, that's right. So that's the assumption I think a lot of people have, but that's not the case. You mentioned VA, conventional, of course, FHA, right? You can do whatever program that best suits the client, and then you could add the enhancement if you choose to.
Yeah, exactly. And what's nice about it is there's flexibility in every single one of those. With FHA, it allows you to go a little bit higher on your debt-to-income ratios. With conventional, it allows you to be a little bit more flexible with maybe not needing as much oversight with certain inspectors and things, where there's even some very, very small renovation loans. I'm talking $1,000 to $2,000, but if it's small things that the borrower can even do. So the sky's the limit on what, we have 20 different programs that might fit someone's needs, and it's just about getting them plugged into the right one if that's something they're interested in doing. Because, a lot of people don't have $10,000, $15,000 to put a new roof on and paint and do new floors and such. So if you can do that, gain the equity that you would have normally without paying high interest debt on whether that's a HELOC or a home improvement loan that's charging 8 to 10%. Those aren't accurate figures, but they're ballpark. It can make a big difference paying 3.25% on that work done and gaining instant equity. So it's a really great opportunity if it's the right fit.
Yeah, I mean, instead of going to Home Depot and getting a credit card, I mean, right?
Exactly.
Like that's what a lot of people do. And the other thing to mention is, we're not tax experts, but at least for now, your primary residence, you can deduct the interest of that loan at 100% from your taxable income. Double check it with a CPA. Don't listen to me, I'm a chimp.
Little caveat there.
Yeah, but seriously, I mean, like we often see it in inspections, right? Inspections come back, and there's as we get in this environment where we have a very shallow inventory in our pond and more demand than we have supply, and people are trying to find homes and trying to take advantage of these great rates. Inspections often come back and there's issues, and nobody wants to pay for them. Like this, the buyer doesn't have the cash, and the seller doesn't want to necessarily deal with it. So this is a great way to fix, that heating and cooling system, or to fix that foundation, or to fix that roof, like you said, or to add a shop, or to add a pool. I mean, add a deck. I mean, there's an amazing amount of things you can do with this program. Yeah, I'm just stoked that you understand it. And you know what I always tell people about prime lending is that they're not insecure, right? They will refer you to whoever is the best. They will tell you honestly what they can do at a high level and what they cannot, and that straight up honesty is a cool quality and an admirable quality. So they're one of Keller Williams' definite preferred lenders. Hey, we're coming into the end of a segment, Michael. Thanks for calling in.
Yeah, thanks, Russ.
Yeah, appreciate it as always. Keep up the good work, you and Sharon Crockett. What's the best number to get a hold of you, Michael?
425-760-8824, and we're at the Confluence Technology Center, so give us a call if you have any questions.
As always, guys, throw your phone in the drawer, spend some quality time outside with your friends and family. I'm sure you're tired of them inside. Be present, right? Life's pretty short. The world's going to keep spinning regardless. Thanks again for tuning in to Home Sweet Home with Russ McClellan. Have a fantastic Saturday.
I have a new home. Home sweet home. Thanks, Keller Williams. I love my dream home.
The preceding program is sponsored in part by Keller Williams, Prime Lending, and Frontline Real Estate.
More complete coverage, more breaking stories here. News Radio 560 K.